Most people think halvings become less bullish over time as more of the outstanding supply already exists. I don't fully buy that thesis. You're saying miner sell pressure mattered more in 2012 when only $30,000 worth of Bitcoin was mined daily, even though now it's $60 million mined daily? I think it's more complicated than many people think. Yes, of course, the new daily supply is much smaller relative to the existing outstanding supply, but a large majority of the outstanding supply doesn't move. Most Bitcoin sits idle, held by long-term holders. So arguably in both scenarios, if all coins or almost all coins are not moving, any decent sized buyer can really move the market in an extremely illiquid market. Now, with the assumption that almost all coins are not moving, a flat price effectively means miner selling equals DCA buying from net savers. Since the price of Bitcoin is set at the margin, it doesn't take much additional market buying to really bid the price up. If the market is buying more than the amount being sold by miners, then the other sellers must be existing holders. And most existing holders aren't willing to sell anywhere near today's prices, if ever at all. For example, Lyn Alden just pointed out that about 8 billion in cumulative net ETF inflows, along with some other opaque exchange inflows, just this year contributed to Bitcoin rising in market cap by well over 300 billion. This is where the idea of the Bank of America 118x multiple comes into play. Buy $1 of Bitcoin and increase the market cap by roughly $118. Humanity has never found an asset with a perfectly inelastic supply. When buyers show up to buy an asset the world cannot create more of, it doesn't take much buying pressure to move it up quite massively, hence the idea of 118x multiple. In relation to the halving, assuming what I just mentioned, I still think it is likely a massive catalyst for the next 18 months. When $60 million of daily sell pressure turns into $30 million and buying pressure remains the same or even increases, then price is going to increase and likely increase significantly. Importantly, mining sell pressure likely won't increase significantly, even in dollar terms, for a while. It takes time for more miners to come online, build out the infrastructure, and plug in machines. So the existing miners that survive will likely only sell enough to cover their operating expenses over the coming 12 to 18 months. This means the price can rise significantly, but the daily sell pressure from miners can remain roughly the same. Now, conceptually, the block subsidy is a flow of newly released coins. So there's no immediate effect because flows require time. This is why on the day of the halving, nothing happens. But it's a key reason the 18 to 24 months around the halving, Bitcoin experiences a massive bull market. All in all, global adoption is still minuscule relative to total global wealth. The halving is just another bullish catalyst to wake up the price a little and ultimately get another wave of individuals and companies paying attention to the best money humanity has ever discovered. We're now about a month and a half away from the 2024 halving. If you're not paying attention, you probably should be.